everyone. Welcome to the Into Property Investing podcast. Today we welcome Gareth Tucker, mortgage advisor. And actually, Gareth is my mortgage advisor as well. So Gareth brings a wealth of knowledge to the podcast this morning, built up over many years of being an advisor, both for investors and residential mortgage customers. Gareth's background previously worked for Barclays and more recently Pure Property Finance. So a huge welcome, Gareth, to you on the Into Property Investing podcast.
Thank you, Roger, and thank you for that lovely introduction as well. No pressure, but yes, I have been doing this for around 20 years now, unbelievably, and started off employed, as you mentioned, been self-employed about 6 or 7 years, dealing with a real mixture of residential mortgages and buy-to-let and property investments as well. So hopefully I can have a chat with you about that today.
And thank you, Gareth. And like I said, a huge welcome. We're really looking forward to having you and sharing your insights around the property market over the next half an hour or so. Without wanting to hang this out, how would you describe the current state of the UK market, particularly for property investors? It's a changing world at the moment.
Yeah, it is a changing world, and as you know yourself from conversations we've had in the past, things are always changing, not always for the better at the moment. I think it's fair to say since sort of October 2022, with the mini budget, that kind of had a huge impact on the buy-to-let market, mainly because we'd had it so good with interest rates for so long. And the rise in interest rates meant that there was a rise in payments, the rental yields went down as well, and more recently the stamp duty changes. However, I have still seen appetite in the market for the buy-to-let, and I think we can see from rents have gone up, so there's still bargains to be had. Landlords, they're still looking to purchase. What I would say is possibly more for the long term rather than the short term. You'd see people buying a couple of years, make quite a lot of money and come back. So I think there's been a shift in attitude to buying properties for the long term.
And obviously you've got to be in this for the long term. There's very little money to be made on buy-to-let if you're just in it for the short term. But things are changing in the market, as you say, almost on a daily basis. And we'll look forward to getting a little bit more of an insight into your views on the market throughout today's podcast. So with interest rates fluctuating, what impact are you seeing on investors' ability to secure funding? From my side, I'm seeing it's becoming harder. People are asking for more information, but it'd be really great to hear your insights.
Yeah.
Of how that's looking.
Sure. I mean, at the moment, yes, I won't lie, it is harder to get finance than it was maybe 3, 4, 5 years ago. I think the biggest factor in that is the interest rate rises of the last couple of years. They went up rather than gradually. They seem to go up almost overnight. And what has happened in the past is where interest rates are at sort of 1.5%, and you were lending at 3%, it was very easy to get large loans on higher value properties. That's not the case anymore as well. So I'm seeing people buying lower value properties because they're able to pass the mortgage stress test, which I'll go into later on in the podcast as well. On the higher sort of value properties, simply put, the rent doesn't match the stress tests or the monthly payments, and it's not making investors worthwhile time as well. So it's the same for remortgages at the moment. I'm finding a lot of existing landlords who borrowed money when interest rates were very low, when they're now coming to remortgage and even trying to pull equity out of the property, they're finding it a bit more of a challenge as well. So my advice with regard to that is, and again, as we talk, we'll go through this, is to just speak and get the advice before you start making plans and viewing properties. Make sure you can secure the finance to avoid any sort of disappointment.
Yeah, we see that so often at the moment with other people I'm speaking to in the market around, particularly bridging loans. And no, that's not the area that you specialise in, but particularly people thinking, right, okay, I can secure a bridging loan quite easily, and obviously the market is changing, and it's about having those products and access to that finance lined up in advance of securing those deals. So commit until you've got the finance in place.
Yeah,
it's probably
exactly.
the friendly advice.
Correct. Yeah, absolutely spot on.
So as the market's changing, are you seeing any specific types of mortgage products or deals that are more popular for investors right now? How are you finding the people you're working with?
Yeah, sure. So I'm seeing a lot of people now changing their plans with property. We mentioned at the start that buying property short term and making money, not seeing a huge amount of that. So 5-year products, fixed rates, they're more popular because they allow people to borrow more money in most cases. I'll give you an example. On a 2-year fixed rate, lenders will stress test at a higher rate than the rate that you're actually borrowing, which means that you will have reduced borrowing amounts. Whereas if you go for a 5-year, the lender will look at that rate and they will stress test at that rate of interest, which allows you to borrow more money as well. So that way people are holding on to the properties longer. They're able to purchase, they're able to get the equity out of the properties as well. Another thing I'm seeing landlords diversifying into multi-unit blocks, and also looking at things like houses with 3 flats in it, but all on one title. Rental yields on those tend to be a bit higher. So people are looking at those with a view to maybe splitting them in the future. I'm not sure. HMOs as well are also something that I'm seeing more interest in as well, mainly to do with the rental yields versus, the purchase price. And the chance of renting them out is greater at the moment. So yeah, there's been a bit of a change, not so much in products, but other than the 5-year fixed rate, but also leaning towards the type of mortgages and properties that people are looking at.
So how is the UK economic outlook in inflation? Obviously, we all know about the cost of living crisis or changes to cost of living and what an effect that has had on everyday living standards. How has that affected the mortgage lending criteria?
Well, I think we've probably gone through the worst of it. I think I mentioned that the mini budget, the buy-to-let world completely changed with that. I think people have now got used to the fact that interest rates, they've been fairly consistent for the last 18 months. They do tend to fluctuate and go up and down slightly, but I think now landlords have kind of got used to the fact that this is where it is. We're not going to go back to the sort of very, very low rates of years gone by very soon. But I think for investors going forward, obviously the stamp duty change that came in immediately has had an impact. I think we're probably going to see purchases falling over the next sort of 12 months, but remortgage-wise, people might want to take money out of their properties to spruce them up, to increase the rents that they're getting. And also as well, again, when they're investing, looking at properties with the greater rental yields, going back to HMOs, multi-unit blocks, or perhaps properties that are in the larger cities or the higher values as well. But I think 2025 will be a little bit more of the same in the buy-to-let market. Similar challenges, but I don't expect a huge amount of dip in it as well. There'll always be people willing to invest in property in this country.
And I think you're right in terms of adding value to existing properties, either by doing refurbs, maybe just prior to remortgaging. And we've got one, certainly we're looking to add additional rooms into one property to make sure that when it comes for remortgage, it stress tests really well, and we can pull out the finance we require basically as part of our business plans. Yeah, there are so many challenges at the moment, but with good advice and good people around you, you are guided particularly well. And that has, like I said, it is about having good people around you to be able to guide you in these uncertain times.
It's really, really important, especially if you're first starting out.
So what are the key challenges property investors should be aware of when seeking mortgage approvals in today's market?
Yeah, sure. So I think the biggest thing that I've seen over the last 12 months is to make an inquiry. If you see a property that you like, or you're thinking about going into property investments, don't go and find the property first. Seek the advice. Chat to somebody about it. There's a lot of properties going on the market that might seem like they're too good to be true, but it's always worth just double checking those. One of the things that I do for my customers are, if they ever come to me, I invite them to send me a link to the property, along with how much rent the property is anticipated to be. No lender will ever give you a 100% guarantee that it will pass the valuation, but they will certainly give you a 100% no if it's not for them. Examples are properties above commercial premises, things like that as well. Just send a link through to mortgage advisors, other things as well. But yeah, the advice should be just do it in the right order. Get the advice first before you start looking for properties as well, just to avoid disappointment. Or in some cases I've seen people put money down on properties only to find that they can't lend on them, and then they lose that deposit.
Yeah, that's particularly painful. Yeah. Certainly, I think most of us have been in that situation where we've offered on a property, had something accepted, and then the finance market has changed.
Yes.
So it is having plan A and B in the back of your mind as you go through that purchase, through that purchase process. So obviously thinking about the experienced landlords amongst us, how can investors leverage their portfolio to secure better finance options?
Okay, so I think a couple of things on here as well. Firstly, try not to leverage too much. One of the factors when you're remortgaging, looking to take properties out, lenders will well, some lenders or most lenders will stress test your portfolio in the background. So there might be the temptation to try and take as much money out of the property as possible, but be careful, because if you take it up to sort of 80% or more, some lenders are not, they're not, they're concerned a little bit about that as well. The other thing is as well is when you're thinking about this is to think about a 5-year option or even a second charge or something to get you through this, to take the borrowing out. The main reason being is again, just a short-term borrowing is very, very difficult to get on buy-to-lets at this moment in time. 2-year products. I know you might feel that interest rates are a little bit higher or they might go down over the next couple of years, but you'll just find that your borrowing will be limited if you want to try and take money over the short term. So I think it's about possibly changing mindset really, and preparing yourself in order to do this. Don't take too much money out of the property, and be prepared to take it out over a longer period rather than just for the short term as well. Or look at second charges if that's important, and pay the higher rates over a shorter period of time.
Really interesting. Obviously, that's a slightly different strategy, which some people use, is to put second charges on properties and taking out second mortgages, which is another way of just drawing a little bit of money out to hopefully go again if you want to purchase more property.
I mean, that's a good example. If you're in the middle of a 5-year fixed rate, for example, and you might want to sell the property in 3 years' time, well, if you lock yourself into a 5-year, then you're always overlapping, and at some point you're going to get hit by early repayment charges. If you were to opt for a second charge, if it was the option, again, your advisor would guide you through this. At least it gives you the option to try and borrow something in the short term, because the stress test may be slightly different, to avoid paying early repayment charges if and when you sell the property. If you don't sell it, it may then be the option to remortgage, and have a look at it at a future date.
So obviously there's loads of mistakes which we all make as property investors. I don't think we should hide away from that. What are you seeing in terms of what are the common mistakes you see when people are applying for mortgages?
Yeah, there's two. There's two that I'm seeing. One is finding properties, putting offers on them, even in some cases putting payments down, and then seeing if you can get the finance. I had quite a few of those inquiries last year where I couldn't help people, and they either lost money or let people down when they came to invest in it. So that's one of the mistakes that I've seen as well. The other thing is, for existing landlords, is trying to raise the money for deposits at the same time as trying to purchase the property. If you're doing that, if one of them falls down, then the other one falls down. So if you can't raise the deposit, then you can't buy the property, and it all sort of collapses. And again, sometimes valuation fees, legal costs, they come into the equation, and depending on the value of the property or the type of valuation, that can be quite a lot of money for somebody to lose. What I always advise to existing investors is before you look at properties, if you are looking to use money from your existing property, apply for the deposit first. And that way, not only do you know that you're safe, that you've got the deposit, but also when you go and negotiate for these properties, you can go in with your mortgage offer for your further advance or your remortgage and say, I'm ready to go. Here's my proof of deposit in the form of a mortgage offer, which is valid anything from 3 to 6 months. If for whatever reason you don't use that money, the offers simply expire, and you're not committing to taking out the deposit should anything go wrong as well. So yeah, always make sure that you've got everything in place first before you start viewing.
So when someone's gone through the application stage and the mortgage company or bank is looking at assessing the investment, what do they consider, and how do we as investors prepare to give them the information they require?
Yeah, sure. Great question. This it's a really good one, because applying for it is all about preparation. And what I would always advise people to do is firstly, as I mentioned on previous, make sure that you've got your deposit ready. That's one of the biggest things for purchase. They want to see evidence of deposit. Always speak to a mortgage advisor. If you've got savings, if you're getting a gift, okay, if you're purchasing a limited company or personal names, don't move any of the money around. Leave it where it is and go by the guidance of the mortgage advisor. Always speak to an accountant or a tax advisor if you're first starting out, to make sure that you're purchasing the property the right way. There are different tax implications which I wouldn't be able to discuss, but somebody who's qualified would certainly point you in the right direction. And then if you're setting up a limited company, get advice on setting up that SPV before you make an application as well. As far as then applying for a mortgage with lenders, what lenders are looking for, they're not hugely bothered about your own personal income in most lenders' cases. So there's, I have a lot of first-time investors or people who start maybe on their first or second property say, I only earn this amount a year, I'm not sure if I can get this mortgage. Lenders predominantly look at the rental versus the mortgage payments and their own sort of internal stress tests as well. So don't worry too much about if you've got a relatively low income versus how much you want to borrow. As long as the rental income makes sense with the lender, then that's what they would look at as well. So again, it's about getting the right advice on this. And going back to what I said a moment ago, if you're ever unsure, just get the value of the property, size of deposit, the rental income you expect, and whether you're looking to purchase in personal or limited company. And more often than not, we can give you a good idea of whether or not it's something you can help with.
Yeah, and again, that's great advice. I think that from my side, it's about, right, okay, having that deposit in place. But if you are starting out, is there a minimum amount you should be earning from a lender's perspective prior to considering investing in a buy-to-let? So you've got an annual salary of, I don't know, 20, 30, 40,000 pounds. Is there any guidance you can give our listeners?
Yeah, sure. So again, this should go down to the advice. Some lenders do have a minimum threshold, and that will vary from lender to lender. There are quite a few lenders out there who aren't particularly bothered about how much you earn, although be aware if you don't earn a huge amount, but you've got a lot of outgoings, sometimes risk can come into that. So if you've got an income of 25,000 but debt of 40,000, that might come into play. But even then, there are some lenders that will just say, look, as long as you're not completely reliant on the rental income to survive, and the rental income supports the mortgage within our sort of stress test, which vary from lender to lender, then more often than not, you can look at it. They also look at your credit score. So what I would say, and there are plenty of free or payable options out there, monitor your credit, make sure that you've checked that to make sure there's no anomalies. And if there's anything you can do to improve it, then there's loads of resources online with these sort of credit agencies where they can help you to improve that.
Thank you, Gareth. And yeah, in terms of where would someone look for information on their credit score, which companies might be out there?
Lenders use Equifax, Experian, TransUnion, and there's checkmyfile.com, which cover all three. But yeah, you can pay for some additional services. You can apply for free ones. I think Credit Karma is another one that springs to mind as well, although the scores on those are not used by lenders. But if you went to Equifax, Experian, TransUnion, and as I said, checkmyfile.com covers all three, then you'll probably find that will give you all of the information that you'll need. And each one of those websites, as well as offering you just an insight into your score and your report, will also give you tips on how to improve it where needed.
That's really useful to know. Yeah, I'd recommend everyone go and have a little look at that just to know what their credit scores are looking like at the moment. So we're looking forward to the next sort of 6 to 12 months. Obviously, it's going to be a busy 2025.
Hope so.
What does the mortgage market look like, or what do you think the mortgage market looks like for the next 6 to 12 months, and how should property investors plan?
Yeah, I think that the market's going to be a bit more of the same. I think the stamp duty increase is going to affect people's thinking. I don't mind saying I have had a couple of customers who are looking to invest, saying that they're just pausing for the while as well. But I think it's just about mentally preparing themselves for that and adjusting a budget. And perhaps they've had to wait 6 months because they've had to find that extra cash as well. But I think preparing for investing, if you're a new in, getting the paperwork together, getting the right advice before you start looking at properties is an absolute priority. It must be the first thing that you do before you start looking at properties out there as well. Even if you're just thinking about it, have that conversation. If you're not even going to buy for 6 to 12 months, at least you know what you've got to do ready for when you're going to do that. For existing customers as well, if you've got a portfolio, then send it through to, advisors. You can send it through to me if you want to. I'm happy to have a look at it, see what you can do, see where you can line things as well. But yeah, it's all about the preparation as well. Don't go looking at properties first. Make sure you can get the finance sorted out. Getting the property then is the easy bit, I suppose. It's all about making sure that you can get the finance to purchase it or remortgage it.
Yeah, thank you, Gareth. And yeah, that's a very kind offer to look at others and give them that advice. So thank you. I'm sure there'll be many listeners who will take you up on that. Do you think there will be any changes in terms of the criteria from lenders as well and potential government support for investors in the near future? Like I said, things are more challenging. It's a lot harder to to find deals which stack, not make deals stack, but find deals which stack than it was a few years ago.
A bit controversial is I don't think the government's going to give investors any help anytime soon. I think their concentration is mainly on first-time buyers and, the residential kind of market as well. With investors, there is an assumption that you kind of know what you're getting into. Property can go up, but it can also come down as well. And we can see, over the things, whether it be the EPC rating that was due to come in a few years ago or the stamp duty increases, the buy-to-let market is really, really important to the mortgage market and to the economy as well. But I don't think investors can expect too much help from government. Maybe I'm wrong, and I hope I am wrong too. With regard to the mortgage market, rates have gone down slightly over the last 18 months or so. Not a huge amount, but they have gone down slightly, which has resulted in lower stress tests as well and slightly higher sort of borrowing amounts. So if rates do fall over the coming sort of months, then that might help to not just reduce the rates of interest, but allow for more equity to be released. Again, it's likely to be on a 5-year fixed rate. Yeah, again, having a chat with mortgage advisors and looking into this. But I have seen rates slightly drop. But the biggest thing is arrangement fees. In some cases, not all, have started to slightly drop as well. I think we've talked about this in the past when we've spoken that, a couple of years ago, these great big arrangement fees were, they were very, very unpopular. And I have started to see them soothe in some cases, but hopefully that will continue over the next sort of 12 months or so.
I think we were all used to having lower arrangement fees, and it became, obviously it's now the norm, but it came as a little bit of a shock, to say the least, when I was mortgaging one of my properties, that the arrangement fees are significantly higher than what they used to be. So yeah, it's worth noting that one and making sure that you
absolutely, yes. If anyone's listening, please make a note of that one. It will, prepare yourself. Some of the products come with arrangement fees, but when a mortgage advisor looks at it, they'll always make sure that it's practical and it makes sense to pay an arrangement fee before recommending any mortgage.
So thinking about the mortgage products now, Gareth, are there any lesser known mortgage products or strategies which property investors might want to explore to maximise their returns?
Well, I mean, the mortgage products are sort of generally across the board, very similar. But the type of lenders that are out there are lenders with varying different stress tests. Okay, so there is the temptation to go online, and you will see the Google ads for the big lenders and everything else as well. But there are lots of smaller lenders that nobody's ever heard of that will end up putting mortgages with. For example, there are lenders who do up to 85% loan to value mortgages as well. There are lenders that will lend to sort of first-time buyer, first-time landlords. I've had quite a few younger people who've got money in the bank, but they don't earn a salary to buy a property. So what they've done is they bought a couple of buy-to-lets in their 20s with a view to making money on those and get some surplus income in, so that when they buy in their 30s, they either sell the properties to bump up their deposit amounts, or they use their rental income that they've been receiving for a number of years to increase the amount of mortgage that they can get as well. And there are lenders that will look at that. They won't always be a high street lender, and that's where mortgage advice comes into it, because there are lenders who are almost, you will never have heard of or not available online. Some will only deal through mortgage brokers as well. So yeah, have a chat about those. But HMO products, different stress tests, different attitudes towards people's personal circumstances. There's something out there for almost everybody at the moment.
And we love a top tip, Gareth, on this podcast. So what would your top tip be for investors looking to navigate the current market effectively?
Okay, so my advice would be at the moment, okay, I've mentioned this several times, is to have a chat with somebody about your plans before going ahead and doing it. It's the wrong way around to go and find a property, make an offer on it, and then come back and see if you can get the finance. It can quite often end in disappointment on there as well. So yeah, definitely speak to somebody about your plans, especially this time of year, start of the year, January. If you're planning on investing, it's never too soon to start talking to somebody about your options. Not so much about rates of interest, but what your plans are. See whether they're realistic, build a relationship with somebody, and see what they can come up with for you.
Thank you, Gareth. And some brilliant advice. It's all in the planning ultimately.
Absolutely.
So making sure you've got your ducks in a line to make sure there's no disappointment at the end of the process. So, Gareth, we ask all our guests on this podcast for a book that they would like to recommend that maybe is influential approach to finance or property or developing small business. So yeah, have you got a book which you're currently reading or or read in the past, which perhaps you'd like to recommend to our listeners?
Well, this is a bit of a different one. There's lots and lots of information out there. One of the things that I've actually listened to, I haven't read, I will be saying, but it is an audio book, but it is also available, is The Complete Guide to Property Investment, How to Survive and Thrive in the New World of Buy-to-Let. There's some very good tips as well. The gentleman who wrote it has also got a very successful sort of website and podcast as well. So that is one that's also good. I'm also quite a big fan, and this would help with organisation, of your sort of mindfulness. So for Christmas, I actually had one called Just One Thing, which is right by the side of me, which also helps with organisation. And the reason that I say that is there's little tips in there that you can implement, whether it be freezing cold shower, not a fan of that one, or just doing 30 press-ups every morning, or singing at the top of your voice. But if you can implement those sort of things into your day, it helps with your organisational skills, which I do think when you become an investor, making time for certain things is going to help. I think from property side of things, there's a plethora of information out there. One of the things I would say, if you're going into that, always make sure that the book that you're buying is up to date. You don't want to be buying a property investment book from 2007 because it's going to be completely different to something from 2024, 25 as well. So, yeah.
Yeah, it's certainly a moving market, isn't it? So,
Constantly.
Keeping up to date with those market trends, whether that is investing in your education, whether that is speaking to your mortgage advisor, but you want someone or information which is current, because it's a changing market.
Yeah, exactly. And podcasts like this, Roger, just you put your headphones on, or if you're watching, you've got them on in the background. It's just a constant reminder, and it's constant. Even if you just take one tiny little tip from something today, it will help you in the long run as well. So hopefully I've been able to give enough information to help somebody with that.
Brilliant, Gareth. I really appreciate it. Most of the time I listen to my podcast when I go out for a run. Yeah, I find that, it's a good time just to listen and have some quiet space to take on most up-to-date information. So, everyone will have their different approaches to taking on information and keeping up to date, but that's just one of my things which I do. We also ask Gareth about guests or future guests for the podcast. Do you know anyone, or would you like to recommend anyone who would make a great guest on our podcast? The follow-up to that would be, would you be able to introduce us?
Yeah, well, actually, I work for a company called Pure Property Finance, based in Cardiff. I deal with the first charge mortgages here as well, but we also deal with bridging, development finance, commercial finance, which I think for investors as well as residential, also look at semi-commercial and commercial buy-to-let. We've got a number of people here who are vastly experienced in that. I'd be more than happy to to get somebody on here to help you talk about that. And for people who are looking to invest in something other than residential property, I think it would definitely be worthwhile also asking them some questions and grilling them about what's going to happen over the next 12 months as well. So, happy to do that for you as well, Roger.
Amazing. No, certainly we'll take you up on that offer, Gareth. I think there's so much information which you need to try and navigate as a property investor. So, if we can get some further guests on the show, that would be amazing. And I'll chat to you about that separately. So, just a couple of general questions now, Gareth. These are more for fun, but what has been your biggest mistake in starting your business?
In sort of going forward, well, my first mistake was I didn't go self-employed sooner. I was working, as I mentioned, for Barclays Bank. I loved my time there, and I didn't actually realise at the time, but I did learn an awful lot working for them. But I became, we used to call it Barclayfied. I only knew about their products, only knew about their rates. And then when I eventually decided to make the jump, I couldn't believe how many different options were out there, how many people could be helped and what type of properties and all these sort of things. And my knowledge just kept increasing, always learning new things, and as well as being my own boss and, and being in control of my own destiny. So, if I could have become self-employed sooner and taken that leap of faith, then, I probably would have done that a long time before I did.
That leads nicely into what's your biggest learning throughout your professional career. What have you? What would you say your biggest learning has been?
Like, this is very easy for me, is not to rest on your laurels. When I first started out self-employed, I had a mobile phone and a laptop. I opened it up and I sat there waiting for the business to come to me. And guess what? It didn't happen. You have to go out there, you have to introduce yourself, you have to constantly update your knowledge bank, you have to meet people, you have to offer good service so that people come back to you and you build relationships like we have, Roger. We've been speaking for a number of years, and I think it's just really, really important to just keep in touch with the latest things, and just you have to put effort in if you want to make something work.
Following on from that, I guess, what's the biggest regret, particularly in your business career, professional career? What's your biggest regret? I think you mentioned one earlier in terms of maybe not becoming self-employed earlier.
Yeah.
Is there anything else which you would be happy to share?
Not buying property in the mid-90s. I was in my sort of mid-20s back then, giving away my age a little bit as well. But yeah, if I'd known what was going to happen to properties, I wouldn't have gone out as much and perhaps put more money aside to buy a house. But yeah, listen, nobody's got a crystal ball as well. It's not a huge regret. As such, as I said, not going self-employed sooner might have been one as well. I also think as well with the challenges, whether it was COVID in 2020, budget as well, is just to make sure that you're sort of prepared a little bit better for those sort of events. That was a bit of a learning curve during those, but perhaps that's for another podcast.
Yeah, I think that's particularly during those years, that anyone who failed to learn something during that period would have, it's difficult, isn't it? Sorry?
It was strange times, and it was
Very
5 years ago this March as well. I can't quite believe that.
I've got a daughter who's turns 4 in April, and where's that time gone? Like I said, life has changed significantly, and we'll never go back completely to the way it was before, especially with the growth of digital tech. In particular, it's everything's different. Hey, like I said, exciting times ahead, and we move forward, and there's plenty of opportunities out there. So thinking about your younger self, Gareth. Sorry, go on.
That's all right. No, I was saying that's exactly right. Yeah, there's plenty of opportunities still out there. There's plenty of lenders out there for investors. So, don't be put off by what you read. Speak to somebody and just do your research and you'll be all right.
So just thinking about your younger self, I know you've reflected on that a little bit, but what advice would you give to your younger self that you've never heard anyone else say to you before?
Well, I'm not sure if anybody's ever said this before. I'm sure they have. I mean, the old cliche sort of come to mind, but I think it's just about having a bit more confidence to take that jump, to take that leap of faith as well. With property investors, you speak to people and they say, oh, I can't do that, or I can't do this. What if I get this? What if I get that? What if you don't? What if it does work out? Life is full of risks. Just take them. If you buy a house and it works out great, if you don't, it's fine. If you make a mistake, you know not to make that one the next time around. You'll always wonder, what if? And like I said, if I could have done this 20, 25 years ago, having the confidence that I've got now, then I would have done it. So, yeah, just believe in yourself.
Hindsight's a great thing, isn't it, ultimately? But as you say, there's so many opportunities out there. It's a great time to invest in property, but you still have to do your research. You still need to make sure that the numbers stack rather than making the numbers stack to justify what you're trying to achieve. We see that quite a lot with people I speak to of stacked deals, and actually when you put in the true figures and reflect that those deals just don't quite add up. Getting good people around you, getting good advice is really, really important. And I'm really lucky and fortunate to have you as part of my wider network and team. So thank you, Gareth.
Thank you.
I've also heard on the grapevine that you might be looking to start a podcast in the future.
Well,
we'd love to hear a little bit about
that. Yes, very early stages at the moment, but it's going to be very, very similar to what we've mentioned on here. It's going to be more very sort of what may be considered very basic tips to begin with to help people applying for finance, with a view then to, the more experience you get, then, you can work your way through the podcast. Again, suitable for people driving in the car to work or on the train, or going for a run, or just taking time out. So yeah, look out for that, and I'll let you know once it's up and running. So you could be my guinea pig and have a first listen if you like, Roger. Let me know what your thoughts are.
Amazing. I'll look forward to listening to that. But also we'll put some details in the show notes to allow to hopefully give it a bit of a plug as well, Gareth. So
thank you, Roger. Very kind.
So I'm going to stop the recording now. A huge thank you from me, Gareth, and we'll look forward to speaking to you again very soon. You'd be more than welcome to come back on the podcast. We'd love an update about what things are looking like in this ever-changing market. Yeah, we'll hopefully be welcoming you back on the podcast very soon.
Thank you, Roger. Yeah, thank you. Yeah, anytime you want me on here, absolutely happy to talk you through things with any changes. And yeah, thanks again for your time. I'll catch up with you soon.
And thank you, Gareth. Speak to you soon. Take care.
Thank you. Goodbye now. Bye.
Bye.